Hello, I'm Jeff Gordon. I'm going to take a moment to explain the crazy world of coinsurance as relates to property and casualty insurance. Let me just begin by saying it has nothing to do with coinsurance as is used in health insurance. That's an entirely different topic altogether. But here's how coinsurance works. It's one thing, it recognizes the fact that the vast majority of insured claims are less than 5% of the value of a given property. So for example, let's say we have $1 million building. The vast majority of claims are going to be settled for less than $50,000. And yet, the value of the building also is an indicator of the possible severity of losses. And so, the insurance industry wants policyholders to insure based on a level playing field. That is, the levelest playing field that we can use is the actual replacement value of a building or of the property that you're insuring. And so, what coinsurance is, it is the teeth of the contract that says you really have to insure to close to full value. So here's an example. A common coinsurance limit is 80%. Sometimes we see 90%, sometimes we see 100%, but the most common is 80%. So let's use this example. 80% of $1 million is $800,000. Thus, 80% coinsurance says that you have to insure this $1 million building for at least $800,000. Fair enough. But what happens if you don't? And let's use this example, and let's say that there is a claim, because after all, this is where the teeth come into play. If you have, let's say that a building owner with $1 million building says, you know something, I just want to insure my building for $600,000. And so, at claim, here's how this works. The claims adjuster says, well, we have to apply the did over should ratio, meaning the amount of insurance that you did have divided by the amount of insurance that you should have. So in this example, 600,000 over 800,000 is 3/4 or 75% in this example. And therefore, if this building with insured for $600,000 but worth $1 million has a, let's say, a $100,000 loss, in this example, the insurance company is only going to pay $75,000. The other $25,000 is not going to be paid because of this coinsurance requirement. So it is something that you do have to pay attention to. We have great building replacement software, and we can assist you in determining the proper value of your business property and other items. But coinsurance is something not to be trifled with, and the idea is just to have everybody on a level playing field. So for more on this, and particularly with business income, which is probably the most stealth area where coinsurance is important, give us a call at 800-649-3252 or visit us online at agordon.com, and of course for more whiteboard videos, agordon.com/whiteboards. Thanks for watching. Hope this was helpful.